Thank you for tuning in. So, guys, I've been off the charts for a while now. So, I just want to quickly um, get back in sync with what price was doing and create a how to trade the ICT New York Killzone video for you. So, the New York Killzone is from 8:30 to 11 a.m. New York time. So always set your time zone to New York local time. I'm actually gonna quickly show you how to set your time zone. So just come here to the right corner of your screen, lower corner of your screen. As you can see, mine is on UTC -4, so that's the New York time. So just quickly click on that and then come to New York here. So wherever you are, if you're in South Africa, Johannesburg, don't use the Cape Town, use New York. If you are in anywhere around the world, use the New York. Because every time that I share with you, every time element I share with you is going to be based on the New York time. Okay guys, so from I'm looking at 8:30, I'm going to label this New York Killzone. I'm looking at 8:30 and 11. So at 8:30, so I'm on the 1 minute neck. I'm on the 1 minute time frame. I'm reviewing yesterday's price action, so I'm reviewing Monday the 2nd. I'm looking at US oil. So this strategy, guys, it's not these concepts, they work anyway. So you'll see me use different charts. Like I'm very comfortable closing my eyes and picking a chart and trying, and then I can still see what's going on, you see. So they work anyway, guys. As long as you have a chart, just need a chart. So whatever I'm sharing with you, it works everywhere. Whatever you're trading. I was looking at US oil. Where is US oil? So I was reviewing yesterday's price action, Monday the 2nd. It should load up right now. Here. So guys, as soon as like I said, I'm on the 1 minute. As soon as price opened there at 8:30, we see price trading to this order block, downward close candle. Price trades to the order block, and then it breaks lower, creating a fair value gap. In price, we see price trading lower, and then we see price coming back to the fair value gap. So this is at 8:44. Look at the bodies staying below the fair value gap. So that's a significant price. We have relatively quite lows here. Sell side below this low. Price trades through that. It collects sell side liquidity below this low. Fair value gap here. You see price trading below the low and then coming back to trade to the fair value gap. Again, look at the bodies staying below the fair value gap. So that's what you want to see. If you're bearish, you want to see this fair value gap staying open in terms of bodies. So the bodies tell the story. The wick, it does the damage. So that's like a small significant price that you can see there. So we can see price trading to these order blocks, these consecutive candles. That's one, two, three candles That's one order block. So you can see the opening of this price. You're looking up here. The opening of this price of this order block, this bearish order block. The opening of this price is 915. You're looking up here. The opening of this price, this candle is 9115. Then the close, the highest body close of this candle is close 1914, 1915. Hey, that's beautiful. So it's staying below the opening price of the order block in terms of bodies. The wick, they use the wick to go deeper. So this is actually a mohawk for the order block. But actually what it's doing, it was trading to the midpoint of the fair value gap. So the consequent encouragement, it was trading to that. Then you see price breaking lower. We have an order block here. Price trades to it here. And again, it trades to this old fair value gap. So it goes back and kisses the fair value gap goodbye. Then price breaking lower. What time is that? That's 9:30. So all that 9:30. At 9:30, when the stock market opens, there will be volatility in the market. So you can see this big candle. This big candle, they're trading to this fair value gap and then breaking lower. Fair value gap here, you can enter that for a sell. When that happens, we call that an institutional order flow entry drill. So in ICT's videos, if you see him like put this, it means institutional order flow entry drill. It's when price is so bearish that this fair value gap, you expect this fair value gap to stay open. So you only want price to stay to at the very maximum the consequent encouragement of the fair value gap. So that's a model on its own, the institutional order flow entry drill. Because this one you don't even like need to have a bias to trade this. You see a fair value gap, you see it being partially filled. You enter that for a nice sell, you target liquidity. Price breaks lower. So if for bearish, guys, most of the green candles are going to be order blocks, right? That's just like a quick way of catching what an order block is. This green candle, the opening price of this candle, you can see price coming to trading to the order block perfectly. The opening price of this candle is 1990. The high of this candle is 1990. Looking up here, the high of this candle is 1990. The opening price is 1990. That's perfect price delivery. What time is that? 9:42. Then price breaks low, creates this huge fair value gap, rebalancing price. The very next candle comes back, another institutional entry drill, breaks lower, and then market eventually comes back to this fair value gap, right? What time is that happening? 10 o'clock. So that's the silver bullet. So this is happening at a time where you expect the silver bullet to take place. Let's say maybe you're a silver bullet trader and you don't care to even look at all this price action. At 10 o'clock, as soon as your time starts, so your time of making money starts, of working, price trades to the fair value gap. that on its own you can sell that for a silver bullet sell. But if you wanna wait for the fair value gap formed after 10 o'clock, fine. Price breaks lower, so fair value gap. Price trades back to the fair value gap. What time is that? 10:12. So that's 12 minutes after you were waiting for it, while you could have initially sold here in the second minute. After you sell, price breaks lower. Fair value gap. Price trades back to the fair value gap. You could sell that. What time is that? 10:21. So that's called a revolving silver bullet. Let's say maybe you missed this one. This will be the revolving silver bullet. So it's like a revolver. You know how the revolver works? If you miss, you can still you can still roll the barrel again for a second try, I guess. So you enter there, breaks lower. Here's another fair value gap that I didn't mark. If you missed that, you could have sold this one. Or you can just sell every time it goes down and create more fair value gaps for you to sell. With the opening price of this order block here, it was initially traded to there, but now it becomes reclaimed. So it comes back to it again, so it's reclaimed. It trades to the main threshold. So the main threshold, the midpoint of the order block, while it's also the mid, it keeps and goodbyes this. So let me just quickly remove this. So a lot of things are happening here at 10:32. This week it trades to the low of this old fair value gap. That's beautiful. It trades to the main threshold. That is beautiful. It closes below the main threshold, even below the order block. That's beautiful. So if you don't know how to trade fair value gaps, I know how to trade order block, so I could sell that as well. Sell that, breaks low. Now look, we have a low, a lower low, and a lower low. I made a video on this. Call this a 3 drives pattern. Okay. When you see that, smart money will buy. So smart money will buy that. Now if they're in sell trades, remember every time I say sell that, like, smart money is selling. So now that they'll use this as a way to exit, and then what? And start buying. So when they exit, you're not exit as well. You see. So this is like a small signature in price that as soon as the third low is created there, you exit. You exit. So what time is that? 10:52, 10:51. So you don't have to hold until 11. You don't have to hold until 11. After seeing this drill threads pattern, I made a video on that. I'll attach it to the corner of your screen. You can watch that. Drill threads pattern is a very powerful signature in price. So we see that being created there. Market takes out sell side, buy side there, then it takes out sell side again. Still buy side not taken. Then it takes out sell side again below this low. Smart money, every time that they're breaking the lows, they're exiting. So they're slowly exiting every time they take out sell side. So they'll exit here, and then they take out this low, they exit again, and so forth. So at 11 o'clock, the silver bullet ends, and our New York Killzone ends as well. So guys, thank you for watching. If you enjoyed that, please give us a like and subscribe.